Most people think the only way to avoid taxes in retirement is to just stop making money. But looking at the data, they're completely wrong. There is actually a legal backdoor. It's a set of rules the wealthy use to keep 100% of their investment gains, while the rest of us just happily hand over 20% or more to the IRS. Today, I'm showing you the Stealth Wealth Roadmap. We're going to look at exactly how to pull 6 figures out of your portfolio every single year without triggering a single dollar in federal income tax. Honestly, if you have a brokerage account, an IRA, or an HSA, this might just be the most important 10 minutes of your financial life. Here is the sequential roadmap we'll use today to systematically build your tax-free financial fortress. 1. The 0% sweet spot. 2. The triple tax-free fortress. 3. Bridging the tax gap. And 4. The stealth portfolio strategy. Okay, let's jump right into section 1, the 0% sweet spot. So many investors operate under this assumption that long-term capital gains are just always taxed at 15% or 20%, but that is simply not true. The first secret here is the 0% capital gains rate. Most people don't realize that if your total taxable income is below a certain threshold, which is roughly $94,000 for a married couple, your federal long-term capital gains tax rate isn't 15%, it's 0. This literally means you can sell your winning ETFs, take the profit, and pay absolutely nothing. Let's break down the exact math on how this plays out. Under current rules, a married couple who are both at least 65 and have very little ordinary income can combine this 0% bracket with their standard deductions. So what's the result? Well, they can intentionally realize roughly $146,400 in long-term gains and qualified dividends without paying a single dime in federal tax. But listen, here is the actual cost of missing the 0% bracket. Think of it like feeding your own cash directly into a paper shredder. If you have a low-income year and you do not deliberately realize these gains, you are throwing money away. Failing to use the 0% window leaves your pockets empty when the IRS inevitably takes its cut later, when you're forced to sell at a much, much higher tax rate. So the trick to avoiding that shredder is a strategy called tax gain harvesting. The flow is incredibly simple. Step 1, identify an appreciated asset in your taxable account. Step 2, sell that winning asset, realizing the gain at exactly 0%. Step 3, you instantly buy it back to reset your cost basis for free. And step 4, the IRS is now permanently locked out of those past gains. Even if you get much richer later, you've completely reset the foundation of your wealth, tax-free. All right, section 2, the triple tax-free fortress. Now, the 0% bracket is great for your stocks, but there's one account that's even more powerful because it handles the one expense that bankrupts most retirees. Healthcare. Enter the most underrated account in existence, the HSA. It is the absolute secret weapon because it's the only account that is triple tax-free. There's no tax going in, there's no tax on the investment growth, and here's the stealth part. There's no tax coming out if it's used for health costs. Plus, there are no income limits to participate. But you want to know the real pro move? Most people just use this as a medical checking account. Don't do that. Instead, pay for your health costs out of pocket right now. Save those receipts. Invest your HSA funds and let them compound for decades. Then, reimburse yourself 20 years later. Because there's no time limit on when you claim that reimbursement. That becomes completely tax-free cash you can use for a boat, a vacation, or a house, all legally hidden behind a 20-year-old medical receipt. That brings us to section 3, bridging the tax gap. So what happens if your money is trapped in a traditional 401k and you want to retire early? We actually talked about the tax bomb in a previous explainer, but the solution here is what's called a Roth Conversion Ladder. During your low-income years, you strategically convert small amounts of your 401k into a Roth IRA. You pay a tiny bit of tax on that conversion right now to ensure you pay zero tax for the rest of your life. After a mandatory 5-year waiting period, you can withdraw that converted principal penalty-free. It is the ultimate bridge to tax-free wealth. And finally, section 4, the stealth portfolio strategy. Choosing the right investments is really only half the battle. You also have to master asset location. Think of it like splitting your money into 2 different buckets. Putting a tax-heavy asset, like a high-dividend ETF or a bond, into a standard taxable brokerage account is a total tax disaster. You're paying taxes on that income every single year. Stealth wealth means putting your tax-heavy assets in your tax-advantaged accounts, like a Roth, and keeping your tax-light broad market ETFs in your taxable accounts. So the rule of thumb is crystal clear. You want to shelter those heavily taxed bonds inside the fortress of your retirement accounts. Then, you place your equities, which get that extremely favorable 0% capital gains rate we talked about earlier, in your taxable accounts. One simple swap of where things live could literally save you $5,000 a year in hidden taxes you probably didn't even know you were paying.
And how much is that reorganization actually worth? Well, Vanguard's research estimates that this optimal asset location strategy can add up to 0.3% annually in after-tax returns. If you have a $2 million portfolio, that seemingly tiny percentage translates to an extra $6,000 every single year, compounding over decades. Guys, it's literally free money just for being organized.
So, let's bring it all together. The system isn't rigged. It just has a manual that most people never bother to read. Tax gain harvesting in the 0% bracket, treating your HSA like a compounding receipt vault, using Roth Conversion Ladders to bridge the gap, and mastering asset location. These are the insider rules you absolutely need to build your financial fortress. I'll leave you with this. Will you let the IRS be your biggest beneficiary? Don't surrender your wealth just because you didn't know the playbook. If you want to see the specific ETFs I use to build this tax-free fortress, check out my best ETFs for 2026 guide next. Build your